All right. Just wanted to give some pre-market thoughts here before my voice goes out. um, Crude oil is currently launching off the early range that it had developed from 97.01 up to about 97.40 this morning. Getting an upside push beyond 97.50. That was a pivot that held throughout most of the day yesterday. Really, right now, crude oil has two main levels. It's 96.30 and 98.80. Those are the two big levels. 98.80 is much, much bigger. Has been a key line throughout the year, as a matter of fact, and only was violated when we got up to the 112.24 high. So those 98.80s are big time up there. 98s have been resistance as well, and after breaking down from 98.80, crude has not been able to get back above 98s. It's failed once and it's now approaching again. And 96.30, I think, is held very nicely here a few times. I think if we test 96.30 again, it's probably going to break this time. And if it does, then we have some key levels down below. I have 95.70 and 95.05 down below. But right now, short term, it's bullish. I have upside targets here for crude oil at 97.72, which was just hit. 98.08 is the next one. And then 98.48, 43 rather, would be kind of the scaling point before you get to the 98.80. So those are the upside targets here. If we break back below 97.50 and take out those 97s, then there could be much more weakness here. And that's when you get 97.03 as a target, 96.68, and then, of course, taking out those 96.30s just means there's probably at least a good 1.5 to 2 points on breaking 96.30s. Obviously, with the FOMC coming up, it could be a back and forth range day, and that applies to all the markets here. The ES is currently holding within a tight range. We got 77.5 was a key level here throughout yesterday's RTH trading, and it continued to hold in overnight trading today up to about 83, 84, and that's just a very tight range. We had a huge wide-ranging day yesterday. After a range like that, you usually see a trading range type of market in the upcoming session, and that's especially true heading into the FOMC on Wednesday. I'm not expecting a huge breakout day by any means, but if we do get a breakout through 82.5 or below 77.5, there is some upside and downside targets to play to. Beyond 82.5, 83, there's 85 and 89 as the upside targets. On the downside, you got targets at 75 and 71. But I think, once you find that opening range, just like we did yesterday, the market rallies up and sets the opening 30-minute range or so, and then the market traded within that range throughout the session. It could be similar today, where we set the opening range or the initial balance and kind of trade within the range throughout the day heading into Wednesday's market. Let's see. Let's take a look at the E-mini NASDAQ 100 futures. Right now, the early pivot to watch is 34.70, and the range spans from 34.64 to 34.75. Beyond 75 has upside targets at 80 quarter and 88 half, and below 64s has downside targets at 58 and 49.75. I'll put the spreadsheet out there as well, and that 34.70 pivot can give us kind of an early directional conviction whether price is going to be above it or below it. Overall, the ES and the NQ both reversed from key levels Sunday evening, and that, to me, obviously that's bullish, and it's been the same exact signature as we've seen before, where we spike down, we hit a key level, and then we begin to roll up and rally big before retail comes on board. That's been the signature move of the markets here throughout each of the major pullbacks before new highs are made. There's still obviously the Fed to come out and a lot of volatility before any new high or potential new high would be formed. But right now the signature remains intact. Those 1755s were the next key level that I had on the charts. For the ES, we got down to 54 and rallied. And the next one below that would be 35s. And we know those very, very clean. All right, that's it for right now. We'll see how it plays out the rest of the day. I'll be here throughout the session, and I'll try to make the midday update as well.